Hello friends, this is the Cryptonian taking a look at Bitcoin and the market. The market has been pumping, as you know, this week, and we see a lot of green to the right. One of the bigger pumpers is YFI. You can see here it's 32% today. 32%. Isn't that crazy? I mean, that's crazy. So we have that, and then Matic, of course, was putting in a huge pump earlier, just as recent as yesterday. And so you can see here just massive momentum to the upside. So right now the profit and momentum is in the altcoins. Let's take a look here at let's see. Okay, right. So let's take a look at Bitcoin here. So taking a look at Bitcoin on the 1 hour, we can see that here's the question. The big question is: are we going higher or are we going lower? Is this just a bear market rally or is this a reversal? Is the bottom in? And this is a fair question. It's a question on everyone's minds. So if we're going to see a reversal, if this is the bottom, one of the telltale signs of a reversal is that this 200 moving average, this white line, on the 1 hour chart, and I'm saying 1 hour because anything can happen on the 5 minute, 15 minute, 30 minute, right? The 1 hour and the 4 hour are really, significant when we're talking about reversals and bottoms. So on the 1 hour, you'll see an early sign of a reversal. And what does that look like? Okay, what that looks like here is this white line is a 200 moving average. And this orange line, or this tan line here in the middle, is the 50-day moving average, or 50 moving average, I should say. What you're going to see is the price has to get above the 200 moving average and hold it and at least go sideways and consolidate to be able to bring this 50 moving average up over the 200. And what does that mean? Well, that means this a 50 crossing over the 200 moving average, that is a golden cross. That's what's called a golden cross. And that's what the bulls are trying to do here, okay? This rally. But you can see there's a lot of volatility happening here on the 1 hour, and you can see a lot of these wicks, or what's called shadows, on the candlesticks shows rejection. Okay, so currently we got rejected from this push to get over the 200 moving average. Now remember, I told you this week was going to be critical and next week is going to be critical. And why? Why did I say that? Well, because this week, I thought we may push above the 200, but so far we have not been able to do that. And the more times we get rejected, the more I'm thinking we're not going to make it. We were rejected here at this point. We were rejected at this push here, and now rejected here. Now, Friday is usually a day where a lot of the weekly traders, they take their profits. So I'm really wondering if we're going to make it above the 200. Now, the only way we can make it over the 200 is maybe this weekend on low volume. Maybe we can push above the 200 and create a bullish golden cross that way. And then, of course, there would be a lot of buying that way next week, unless the bears come in and really pound it down. So this is my question, right? I'm not going to. So I guess my not really a question, a statement. My statement is that I'm not going to consider this a potential bottom until I see a golden cross of the 50 moving average above the 200, and of course the price would have to move up and hold that first, and on the 4 hour as well. Okay, so here on the 4 hour, you see it's different for the 4 hour. For the 1 hour, it's the crossover the 200. On the 4 hour, it's a crossover the 50. Okay, so right now you can see we're getting rejected at the 50 on the 4 hour. So, And on the 4-hour, you can see that we just put in technically a lower high, right? We've got a high up here at this line, and then we just closed, or the previous candle, bullish candle, closed here, but now we're pulling back. So it looks like we're having a pullback here. Where would this pullback go? Where would this pullback go if we see some kind of a pullback? Well, I'm looking at the region of the Fibonacci pullback here, and that is no surprise. I use Fibonacci's a lot. Why? Because they work. Because they work. And I said that in the previous video here, and we bounced and went back up from the fib level. So that being said, the fib levels that I'm looking at are still the same fib levels because we failed to really break above this 200 level moving average. So if I take this fib extension, or excuse me, fib level, and I move it over, yeah, okay, make sure that we're at the current high locally, I will see that potentially a bullish scenario is a bounce at the fib level, 0.5 fib level, or a little bit above that, which would be 20,625, something like that, 20,620, around this area. Okay, and then that would actually coincide with this trend line perfectly. So we're losing the trend. We're losing this higher momentum trend line up here. It's already broken. Now the question is, do we come down and hold this and then push up with strength and break through and hold that 200 moving average? That's the bullish scenario. Yeah, see, we're starting to come down already. We're starting to lose that, which I was going to short, but okay, anyway. So we're coming down, we're losing this trend line. You can see this trend line that we've been running on for the past 2 bounces right here, right? So we're losing that. Not a surprise, it's Friday. A lot of people exit the market. Now we've got some moving averages, the 30, the 50, and the 100. And all of these moving averages are above this trend line right here. Okay, so here's the point. If the price comes down, hits a trend line, respects that, gets support, and breaks back above and heads higher, which I think is unlikely, then we could be seeing a golden cross on the lower time frame anyway of the 1 hour, and then we could be having a lot of bullish behavior in the market, a lot of upward price momentum for the next few weeks. However, if we come down, find support in this pocket or at any of these moving averages, or even just this trend line here, which would be, like I said, about the 50 pullback on the Fibonacci, perfect for a bounce, a bullish bounce. If we bounce and come up and get rejected at this trend line, which is that trend line is the neck of the reverse head and shoulders. So if we come down, bounce up, get rejected, or make a lower high, that's going to be a head and shoulders. Then that's bearish, and we're going to come down. Okay, and then I'll be shorting that lower high. So once we lose this area, start bumping our head on moving averages and start trending down, I'm going to be bearish. Okay, I'm going to be bearish. So and then next week, it just really depends. Like I said, this weekend, finishing out this week and this weekend is really important to see where we are on the chart. And the bullish scenario is a push and a close above the 200 daily moving average. 200 daily moving average is currently 21,150. Okay, 21,150. So if we get above that and close above that, then we can see higher prices. If we make a lower high, and if we close anywhere below 21,150, then most likely we're going to be seeing some downward momentum, at least for the short time frame, right? At least for the next few days. And then the next areas we're going to be testing are these fib levels here. Now, if we start breaking these fib levels, right, then that's going to be bearish. And if we take out this low down here, okay, this low here at 19,781, then we're going to be most likely moving lower. Let's see, then that would bring us back down to test these, this lower area, anywhere from 18,000 to 19,500, something like that. This pocket, this area down here. Okay, so that's pretty much what I see on the charts, and I don't want to say that it's bullish or bearish at this point because we just don't know. But right now it is looking like we are losing momentum. It is the end of the week. It just depends on, will we pick up with more momentum this weekend and take advantage of the bears not participating as much on the weekend and push it above the 200 daily moving average, or are we going to finish the week this week below the 200 moving average? And then, depends on next week. If we're very bullish next week, or if we're bearish, or if there's weak price action. So, if we start losing momentum, I'm going to short for at least a retest of this right shoulder, which is 19,750. 19,750. All right. So, thank you so much for watching, friends. I appreciate your time. I hope you have a good weekend. Hope you're doing well. I hope you're making money. We've had a lot of bullish activity, a lot of opportunity to make money in the market lately. But the question is this temporary? It could be. It could be just a bear market rally, and it could be just temporary. And, the real money would be on the downside, right? Shorting and moving lower if this is a bear market. But if this is a reversal and the bottom is in, then we should be seeing sometime between now and next week a push higher above that 200 daily moving average, 200 moving average on the hourly, and then start flipping the 2-hour, the 4-hour, the 8-hour, flipping those moving averages as well, getting golden crosses, the 50 over the 200 on those higher time frame charts. And then once that occurs on the daily, it's official. That's the last confirmation. When the daily flips, when the daily sees a 50 moving average above the 200 moving average on the daily chart, then that's when officially it's bullish, right? And the momentum changes, and then it's upward momentum and higher prices expected from there. So we're in a transition phase right now. We're in a testing phase. So I'll be looking at the charts and just kind of paying attention to see where the momentum leads us. Thank you, friends, for watching. Take care. We'll see you the next time.